Hi and welcome to the Market Alert for Friday, the 18th of December 2020. So the BOE leaves rates as they are and its asset purchases are currently on hold ahead of the Brexit conclusion. It's interesting to see how much money the BOE have printed since March, just under 1.2 trillion or at 1.2 trillion dollars, that is, having ramped it up by 150 billion last month alone. The British Central Bank also kept its benchmark interest rate at 0.1, which is a historic low. So the madness continues, the money printing continues. It's a wonder we can't all see the smoke coming off the printing presses down in London during this madness. And speaking of which, I think this is the one, yeah. Furlough scheme extended until the end of April, so that means we're locked up until the end of April as well. No better news across the pond either, because initial jobless claims surged to highest in 4 months. And again, as I said about the implied volatility, as we look at this also moving lower. We're getting ready for a major correction come January. This should drop lower through December, unless, of course, it starts before then, which it has done in the past. But again, you're going to run the market up to the highs for the tax benefits, the bonuses for the banks during the next week, and then after that it's anybody's guess. But the implied volatility moving down nicely there, and still green here as well. But again, it's an indication that it's coming. There's a major correction coming in the markets, just as we've seen time again in the implied volatility. And this is something that I've been using since 1994, when I uncovered this relationship way back then. And okay, so let's have a look at yesterday. And there's no recorded video today. I'm just going to do a quick review today, as yesterday's was over 30 minutes. This is just to have a look, see where we are, and get a good indication of where prices are. So at the moment in the daily chart of the Dow, we can see we've got this sort of, let me see if I can find another tool here. See if this is the one. That's what I'm after. So yeah, we've got this sort of triangular pattern, which generally you'll see prices break to the upside from this. It's an ascending triangle pennant formation. That's from the orthodox technical analysis of pattern recognition. Not drawn quite well there. It should be off there, but you get the idea of what it's starting to look like. But also, and more importantly, you can see the market trading in this sideways range, which is why the volatility is low. But once it breaks, it's likely to head south when it does. There's nothing positive to look forward to in the new year. Don't wish to be the prophet of doom, but anybody with half a brain cell can see with all of the lockups and everything else that's going on. And once Biden gets in, he wants everybody locked up for 100 days, wearing masks and all the rest of it. So, yeah, we know what's coming. They're telling us, simple as that. You don't have to be have the gift of seership or anything like that. They're actually telling us what they're going to be doing and how it's going to go. You can see that just by extending the furlough to April. So let's have a look at the DAX in the daily first. Let me just compress this a bit so we can see where we are. We're still heading towards those all-time highs of 827, and overnight prices are sideways, trading between the high and the low of the previous day there. Let's quick look at yesterday's activity, and let's move back a bit here. We could see that the money was piled on in the futures session, and then a bit when the cash market opened here, and then we had a retracement. Where did the market retrace to? Well, if we take this low from this high, because this is the next low down, or the last low down, we could use this one, I suppose, but we'll go with this one. It's more prominent. So from this low to this high, you can see that prices have traded down to 78% from I say these 2 points, and then found support, and the subtle buying in here as well, where the market slows down. You can see that they're buying back here because the volume is 75% of the previous down bar, but prices have closed back towards the highs and at these crucial levels as well. And not only that, but you've also got the R1 here as well. So prices find support, they move to the upside, we get a signal. I was hoping the market would trade through this high, but prices failed to do so. Where did they stop? Well, if we go from this high to this low and just draw these in, so from here to here, again you'll see the market stopping at 89% of this swing here. And then once it does this, prices, so again, let me just finish this off. This area can alert you to either get to break even or take the money off the table. And then we see prices moving back down. So again, in real time, as I'm watching this unfold, as you've seen in the videos of the last couple of days, draw these in real time, you'll see the market coming back and sitting at 62% retracement, and also 78 there as well. So you've got this swing down, which is where the market would normally stop, and then we swing back to the upside. Where does the market stop? So from this high to this low, we can just draw that in as well, and you'll see the market stop at 78% there as well. So the markets do this, and I'm looking for other clues like a close back below the 5-bar moving average, looking for increases in volume, potential weakness bars. Is the market trading at a fib? Not a fib, but at a pivot point, at a BRN, and so on and so forth. So prices then make their way lower, and if we just come back to where we drew the original low that we used to the high, and then I'm just going to drag this out across here. In fact, I'll just highlight this one and drag it out. You'll see the market stopping at 89%, and at 89% again you were down at the R1 BRN, and we start to see them buying back in at this level. So you again look for these point at these levels. And then in the afternoon, the market, in the pre-market, was interesting. We had the US figures. The market responded negatively by coming back down to the R1. What was interesting here, though, was this spike in the volume here, and then the market coming down and retesting here as well. And you can see, again, it's subtle, but you get the increase up to the average line. And like I say, these are the bars that I'm going to get written into the software, so that when they appear, if you draw in a fib, you will find there will be one. That's just deleted the wrong line there. But here you've got just over an 89% through the 90%, and a double bottom before the market moves higher in the afternoon session. So prices moved up. There was a bit of a battle around the 200 MA there, eventually giving way and moving to the BRN. And if I was to go back right over to the chart there, I would find that this is a 78 or an 89 from these levels, and then the market stopped and then started to trade back. And again, from here up to here, you'll see the market stop at 50% retracement, and at that level you see the buying coming in at the 20-bar moving average. The market doesn't go back a lot, around 38%. Oh no, it's a bit more. It's actually 78% there, 62.8, 78, and then it puts in a double bottom. Again, you get the testing here, and before the market moves back, and then it's plain to see here that we're just over 89% retracement at the double top. They're just on 89% before the market then puts in a sell signal. Prices come back, and this low over here to here, you'll see I'll just drag this across here. We've got 78 and a 62% retracement. And what do we get? We get the volume at this level, and we've got the 200 MA, where the market then finds some support and trades back to the upside. So again, you can see how the market trades to these areas. All it is a matter of doing is just looking back to the left and then drawing them in, as I've shown in the last couple of days. And I did this yesterday in real time as well, which is not difficult to do once the market is actually trading live. And let's just have a look overnight while we're here. You can see the market had a bit of an interesting open there, trading up to the previous day's close through the 200 MA and then trading down to the DP level. Here the market's just put in an interesting pattern because it's come down more or less to the left, traded to this high here, and then all the way across to here as well. So there's a channel there, more so than fibs, and then the market's dropped down overnight. But down here immediately I can see from this low where we've got a high volume bar up to this high volume bar. You can see there the market sitting already in this cluster of fibs. The market breaks through, trades up. We've got some selling pressure here, and then prices trade sideways before moving higher again. So now the market's at the DP level finding a bit of resistance, so all I will do is come back to the low over here to the high of this bar and see how much strength the market's got. That 50% is at the 200 MA and the 20 MA, and I'll be looking for some sort of very high volume at this level, buying pressure and either reversal and prices moving back to the upside on high volume to get back through the DP. So the market is currently around the 200 and the DP level, which is a bullish, and this ties in with what we're seeing in the daily chart, where the all-time high is 827, and that's the same I think on the weekly chart, which it is, which takes you back to February before the virus sell-off. Okay, I think that's it, apart from a quick look at the news. Let's have a look, see what we've got today. We've only got retail sales from the UK, that's out shortly. That's forecast at -4%. It's going to be dire in January, isn't it? And then we've got business climate at 9 AM for the German DAX there. Okay, that will do it for this one and for this week. Have a great weekend. As ever, thanks for watching. See you in the next one.